Welcome to The Explainer. You ever look at a huge list of stocks and just wonder where to even begin? Well, today, we're going to pull back the curtain on exactly how that works. We're breaking down a pro's watch list to see how they find the best shots for a single day of trading.
So the whole thing starts with a pretty wide net, 15 interesting stocks. And, any one of these could be a winner. But the real secret sauce isn't in the list itself. It's in the filtering, the process we're about to walk through. And that really is the million-dollar question, isn't it? If you've got a list of good companies, how on earth do you choose? That's what we're going to answer today, by going through a really methodical process of elimination to find the plays with the highest conviction. Okay, let's dive right into the most important step, the filter. This is where we separate the signal from all the noise. We're about to slash this list from 15 all the way down to just 4, and you're going to see there's a really clear strategic reason for every single stock that gets left behind. First up, we're putting these heavy hitters on the bench. Companies like Disney, Amazon, Apple, they're all fantastic businesses, no question. But for what we're doing today, they're missing something special, a unique catalyst. Right now, they're just kind of drifting along with the rest of the market, and we're hunting for stocks that have a reason to break away from the pack. Next, these two are out, Hims & Hers and Palantir. And the reason is simple. They both have earnings reports coming out today. Now, an earnings report is a huge event, for sure, but it's basically a coin flip on how the market's going to react. Our strategy is all about finding clear, understandable reasons to trade, not gambling. So these are off the table. And just like that, after a little filtering, we're left with our final 4. And the first 2 are really interesting because they aren't just solid companies, they're riding a huge wave, a powerful macro trend that's happening as we speak. Our first contender is Harmony Gold. It's a major gold producer. And with the price of gold showing so much strength lately, looking at a company that literally digs the stuff out of the ground, well, it's a pretty direct way to play that trend. But here's the kicker. What makes Harmony Gold so compelling today isn't just the rising price of gold. It has an extra company-specific catalyst. It just got a strong buy rating from Zacks, which is a big deal. It's a system that basically signals that the experts are getting way more optimistic about the company's future. So, this is how you turn all that analysis into an actual plan. And notice, the strategy isn't to just buy at any price. No, it's to enter in a very specific zone. You've got a clear stop loss to manage your risk and a price target to take profits. The whole trade is mapped out before you even think about clicking a button. All right, our second pick is Kinross Gold, and it taps into that exact same powerful trend in the gold market. This gives us another way to get exposure, a little diversification while still betting on the same big idea. And this is where the strategy gets really cool. Unlike Harmony Gold, which had its own special rating, the appeal for Kinross is a lot more direct. It is a pure play on the strength of the gold market itself. The big trend is the catalyst. Simple as that. And here we go again, a plan built around discipline. The focus is on trying to buy during a little dip instead of chasing the stock when it's already running. It's an approach that clearly defines your potential risk and your potential reward right from the start. Okay, let's totally switch gears. We've looked at a big macro trend. Now let's pivot to 2 tech companies that made the final cut because of very specific company-focused news. So our third pick is Futu Holdings. It's a technology-driven online brokerage platform. You can think of it as a super modern financial services company with a really powerful tech engine. So what's the big deal with Futu? Well, it just earned that coveted Zacks rank #1 strong buy. And this isn't just somebody's opinion. It's a quantitative signal that says the company's fundamentals are strong, and maybe more importantly, analysts are raising their earnings expectations. That can often be a sign that a stock is about to move. And to try and capitalize on that powerful signal, here is the game plan. You've got a tight little entry zone, a stop loss to protect your capital, and a clear target for the upside. All laid out. And for our fourth and final contender of the day, we have a name I am pretty sure you're all going to recognize, the social media platform Reddit. Now, the story for Reddit is all about a change in perception. The catalyst isn't just that it has a ton of users. We already knew that. The key is a recent upgrade from market analysts. This is a big hint that Wall Street is starting to look at the company in a whole new, more positive light. And that can create some serious momentum. Now, looking at this trading plan, one thing kind of jumps out. That stop loss is relatively tight, and that's a very deliberate choice.
For a stock like Reddit that's driven by sentiment and can be pretty volatile, managing your risk that closely is absolutely critical.
So we started with 15 stocks, we filtered out 11, and we analyzed our final 4. Now let's put it all together and see how this whole process builds into a clear, actionable playbook for the day.
And there you have it, the entire process from start to finish, all on one slide. You can see the 2 different strategies so clearly. You've got Harmony Gold and Kinross riding that big wave in the gold market, and then you've got Futu and Reddit, which are driven by these powerful, company-specific analyst ratings.
And that really leaves us with one final thing to think about. After seeing this whole process unfold, which type of signal do you find more compelling? Are you drawn more to the big picture macro trend? Or do you prefer that detailed company-specific catalyst? Just thinking about that can tell you a lot about your own style.
And finally, as always, please remember, this breakdown was purely for educational purposes, just to look at a specific methodology. It is not financial advice. Trading involves a ton of risk, so please always do your own homework before making any investment decisions.